Hello, algorithmic breakout traders. Welcome to Breakout Trading Answered, the show where we talk about all things breakout trading and how would you like to know how to double your profits in the index trades. Well, that's exactly what we're going to talk about today. And of course, our special guest is joining us, Mr. Breakouts himself, Thomas Nesnedor. Welcome, Thomas.
Thank you very much. It's great to be back. Thank you, Andrew. And yeah, we're going to talk about something quite exciting, because if you guys like quick results with minimum effort, that's what we're going to cover today. And I mean it. Just stay here, because in 1 minute you can completely improve in a dramatic way your index trades.
That sounds brilliant. Who doesn't want to improve their profits quickly and easily? So can't wait to see what you've got to share with us today.
Okay, so without any further ado, let's get to it. So we're going to talk about how to double your profit on mainly Emini S&P 500 and NASDAQ, but the technique I'm going to share with you works on any index. So you can use it on any index, but on these two indexes, you will get really powerful results. So let me give you a quick introduction what we're going to talk about. So the technique I'm going to share with you, and we can move to the next slide, please. It's a very simple formula. Doesn't matter what software you use, doesn't matter what kind of what index you trade as well. But this simple formula is going to significantly increase your profit, as I said, especially on Emini S&P 500 and Emini NASDAQ. And it can be implemented literally within 1 minute. And I'll tell you also how I do it, how I implemented it myself. Just wait for the end. And this technique has been proven through many years. And I personally have been using this formula for over a decade. It's one of my oldest tricks ever that I keep using forever from the very beginning, and it just keeps working like a charm, which proves how robust and how evergreen and timeless it is. So who's ready to get this technique revealed?
It sounds almost too good to be true, Thomas. How can you significantly increase your profits in less than 1 minute with a formula? It sounds, is it possible? Sounds amazing.
Yes, yes. And I will give you the evidence as well. Don't worry. I'll give you the evidence.
All right.
So guys, get ready, but wait, stay after I tell you what the secret is. Stay with us, because I'm going to go through real evidence and then some practical important tips. So drum roll, ta-da, and the technique is super simple.
Here we go.
Only trade long after down days. That means if yes.
This sounds so simple.
So simple. So that means if it's Tuesday and yesterday was Monday and Monday was a down day, the odds of having a much better quality of a trade on a long side on Tuesday is significantly higher. And I'm going to show you real numbers. And I'm also going to share, I test these ideas a little bit differently for a reason. So let me show you. Let's start with Emini S&P. Let me also explain to you why I test these ideas a little bit differently. Okay, so if we have a look on Emini S&P, then, and this is 2070, actually 2007, I think it's, I have a typo. No, it's 2007. Sorry, it's a typo. It's 2007 as far as I could use data on TradeStation, meaningful data in TradeStation to 2023. So it's a long history. Now, if you look, and this is how I test these ideas a little bit differently. If you have a look at the bottom and we see the table. So the first column with 181 profit means basically if we take all the hourly bars, each hour, if we take each hour, hour by hour since 2017, and which equals 78 and almost 7,900,000 bars, and we look on an average size in terms of US dollars of every bar, then for the entire history, we would make 180K, 181, and the average bar would be 230. Now, why I do it this way? Why I don't just go to TradeStation and tell it, show me all the days open to close after a down day? The reason is because I want to see, and this is the most important part, the improvement of the quality of the bar inside. I know that the days after down day will be good days, but how really is the quality? How will we improve the quality inside of the bar, inside of that day, like hour and hour? Do we have a better quality of inside bars? And this is quite incredible. So first of all, the quality of an hourly bar increases by 141%, and that's a lot. That's a huge number. I know that $5.56 per bar doesn't or might not mean a lot to many, but we have just increased the quality of 1 hour bar by 141%. What does it mean? It means that on average, if you hold on your position 20 hours, so without this trick, you make $46 on average, okay? If you do this after the trick, it's 110, it's more than $110 on average. So this is like a massive improvement. Now look at another thing, and I think this is the mind-blowing part. This is the best part of this trick. So if we trade only after down days, we would make since 2017 132K, which is 26% reduction compared to holding or trading every bar after bar. Now have a look. We reduced the number of bars by 70%. So we're trading 30% of time, but making nearly identical profit, just 30% less of the profit while being in market just 30% of time. So if we put numbers into perspective like this, again, we could have shown you just a regular TradeStation report. That doesn't show how good this technique is. This is much better interpretation, which shows you that the quality of bars, long bars after a short day, it just skyrockets. It's very high quality of long bars, and it looks like it almost doesn't matter how you time your long trade on Emini S&P after a short day. It can be something super simple, can be a simple breakout. For example, a simple breakout like if you break the first 15 minutes or half an hour up, so we have an established momentum, the first half an hour already, just keep it for another 10, 20 hours, and the odds are at your side. Now let's have also look at NASDAQ, because I think NASDAQ is even more impressive. So on NASDAQ, well, it's similarly impressive actually, but we can see the similar thing on NASDAQ. The caveat here on NASDAQ is that obviously NASDAQ used to be a very quiet and very boring market until probably 2015, something like that, 2017. So we see the equity curve seems to be flat. For a long time, it seems to be flat. Actually, if we would remove this big part going up, it wouldn't be flat. It would go up as well, but very slowly. But if we would remove it, and I didn't do it because I want to compare apples to apples, but if we would remove this low volatility and we would just this high volatility part, we would see going up hundreds of percents improvement compared to the base. So on NASDAQ, again, this techniques works absolutely perfectly and is bringing big improvement. Again, if you trade long after short days, you have unequivocally better edge on your side. As I said, it does work on other indexes as well, but these are not only are the most popular indexes, but are one of the best. You will probably have it, or for sure you will see a poor result on Emini S&P 400 or EMD. You will see poor result on RTY or Russell 2000. The reason is because, and we discussed this in previous shows already, so guys, if you haven't watched it yet, just subscribe to this show. We already discussed these are a little bit more down markets, down indexes compared to NASDAQ. Emini S&P, but you still will see some improvements even on these indexes.
Yeah, I really like the way you've looked at this, Thomas, by analyzing the 1 hourly bars throughout the day and looking. You're looking for the tendencies or the behaviors, and the quality of the move is. I mean, you can see by the numbers there that it's for NASDAQ, the average bar is twice as much when after a down day than any other day, and I think ES was 150%. So that's a substantial difference, right? And I think by looking at the markets this way really shows how much potential there is. Obviously, it's not a trading strategy, but it's just showing you that there's twice as much potential or more during the day after you've had a down day. So I think that's pretty neat.
Right. Yeah. So now let's talk also about the practical implementation. But guys, stay with us before I show you or tell you more about the practical implementation, which is very important as well. Let me just brought to your attention this book. If you are looking for powerful strategies that do work and that can change your life, please don't forget to check out this book. The Breakout Trading Revolution, 1 proven trading formula, endless strategies, and how to attain ultimate trading freedom. Just check it on the thebreakouttradingrevolution.com and you can start building very powerful breakout strategies almost right away. Okay, and we're not done yet. Let's get back to our simple trick. So I said we're going to also talk about practical implementation. And practical implementation is really easy. So first of all, in TradeStation, the formula goes like this. If close D, which means daily chart, 1 means one day back, is lower than open the 1 lower back, which is basically down day, then we have the filter. Now, we have a few ways to play this powerful tendency. First of all, it works on both full and regular trading sessions, regular trading hour sessions. Okay, so if you compare these two, there will be differences, but overall the tendency works on both, which again makes it even more robust, which is very, very powerful. I found out in my research that the full session seems to work a bit better, but it's not a huge difference. There is different, but not a huge one. Now, how do you use this practically? So you have a couple of options. So first option is you basically build this as a master preliminary filter into your strategy development process. So you say, okay, I'm going to look for breakout long entries, but only in days after a down move, which is a very, very valid direction. And then you just, whatever process you use, just keep looking for strategies, entries, exits on top of this master filter. Other one, and this is really good. The beauty of this technique is that you can actually use it in existing strategies already. What you can actually do, take your existing index strategy, Emini S&P, Emini NASDAQ, and add this condition. Try to add it to your existing strategy. There's no optimizable input, so it's not overfitting. It's a tendency. You're not going to overfit your strategy. There's very low risk, but you can see an instant huge improvement of the quality of your strategy. And last tip, if you see it, but you, for example, are not happy that you will reduce the sample size by quite a margin, which sometimes happen. My favorite trick, which I use a lot, is just double your position on days after down days. So keep your strategy as it is, but if yesterday was a down day, your probability of profit is much higher, so double on your position. And that's my favorite approach to this technique. Simple, 1 minute.
So simple. Excellent. So when you say the full session, what time are you talking? Midnight to midnight, or just after it closes right through to the next close, or what's the time session you recommend there?
Yeah, full session means from midnight to midnight, and regular trading means the regular trading hours, which is 8:30, 15:15.
Yep. Okay.
Or 9, yeah, 8:30, 15:15.
Yep. All right. Well, thanks for that clarification. Okay. Well, let me just get to the next slide.
Okay.
So, do you have anything
yes.
else to finish up, Thomas, before I wrap it up for today?
Yeah. So guys, we're sharing plenty of techniques like this in this show. This is just one of the examples. So you can find a lot of value in our channel. You can very quickly improve your trading and make extra money. So please don't forget to give us thumb up, and then don't also forget to subscribe if you want to keep receiving great tips like this. More is coming already in 2 weeks.
Yeah, I should also mention actually that this is the first part of a new series that we're doing. So we just finished up on some algo trading basics, I guess, is the previous series. And now this series, we're going to be talking about some ways you can improve your index trading strategies based on market tendencies. So look out for the next couple of episodes. I've had a sneak peek of the slides Thomas has prepared, and he's got some great tips to share with you guys. So make sure that you come back and see the next couple of episodes. And Thomas, anything to say before I finish up?
Yes, I would like to say happy trading after the down day.
Exactly. All right. Happy trading.
Yeah, thank you.